Hey guys, it's the Trade Tea again, and today I'm going to do something a little different from my usual videos. This is unscripted, it's going to be kind of casual. I'm just going to walk you through my process for fundamental analysis of potential value stocks. And if you don't know what I'm talking about when I say value, I cover it in my last video, but essentially when you're value investing, it's kind of the opposite of growth investing. Value investing, you're looking for cheap stocks, you're looking for low price to earnings ratios. So that's how high the price is versus the earnings they're bringing in. You're looking for low ratios for that. You're looking for low price to book ratios, where the book value is what the company is like worth in its entirety. Like if it were liquidated tomorrow, what would it be worth? That's the book value. And so you're looking for a low price to book ratio, which would indicate that it's undervalued. You're looking just for overlooked companies that have come by hard times, that are in a slump. It's basically bargain hunting. So the main thing with value investing, it's not the same as like pump and dump schemes, like penny stock schemes. We're looking for long-term investments. We think when we're value investing, we think that we've found something that's genuinely worth more than it is trading for right now. So it doesn't need to run up really quickly. Like we don't need a return on the investment in a week or a month. This is like the brunt of the work you do when you're value investing is you're doing research, which is what we're going to do in this video. And then once you research and once you do really, really good research, you can kind of rest easy knowing that you made a good choice. So what we're going to do today is sort of the basic screener. I'm going to show you the screener that I like to build to do basic value investing fundamental analysis. So let's go. I'm on Fidelity. If you don't have Fidelity, it's fine. Just go on Yahoo Finance, go on whatever your favorite little investing platform is. Just use that. It's the same thing. But I have an account with Fidelity, so I'm going to use the stock screener because I like it. So we're going to build it from scratch. I have some favorites, but we're going to just go ahead and build it so I can sort of tell you a little bit of what I'm thinking when I'm doing this. So I already told you that I like to find a low price to book ratio. And so in add criteria, I'm going to do price to book. So below 1 would indicate undervalued. So we're going to go and click low and very low. That is, for me, one of the biggest things that I want to see with a value company, because I don't really consider it value if I'm paying more than the company's worth. That just doesn't make sense to me. I mean, it does make sense. There are arguments to be made for investing in something that maybe they have a lot of debt, or maybe they're not, worth that much yet, but that they have a good idea, they have patents, whatever. Sure, but I like to just have this one covered. It makes me feel better. Like I feel like I can sleep at night when I know that, yeah, if this company just totally failed, it's still worth what I'm paying for it, or it's worth less than what I'm paying for it. And worth more than what I'm paying for it. This is the reason why YouTubers have scripts. Okay. Security price. This is also a non-negotiable because I'm working with, I don't want to invest, a huge amount per share, and even if it's undervalued, my account's not big enough to be investing, $57 per share, on the hopes that it'll run up to 70. That's for people with bigger accounts than me. So we're going to go to low and very low. And so you see how it's like adding all of these criteria. Okay. So let's see. PE is nice to see. I sometimes do end up removing this because earnings can be a little bit iffy with value stocks. So I'm going to actually expand. Normally you would want to see below 15, but I think I'm going to just stick with anything under, you know what? Yeah, anything under 30. Let's go in and manually change it. I don't actually like their ranges very much. 0 to 30. Okay. So you see how the matches that we have are slowly but surely coming down. And some of the things that I like to use for my screener come from James O'Shaughnessy's trending value strategy, which we're not doing in this video. But I do think that it's a super helpful thing to just look at. Even if you're not planning on fully implementing the strategy, just because it covers a lot of the basic stock metrics that you would want to see. So I'm going to read those off to you. It's price book, price cash flow, price earnings, price to sales, EBIT to EV, and the shareholder yield. So we're not going to use all of those, but I do want to see, let's see, shareholder. I'm not going to do shareholder yield in here because that would mean that I would need to pick dividend yield and then the buyback yield. Let's see if they just have buyback. No, they don't even have buyback yield. Okay, but something we might do just for fun, insider shares bought. I'm interested. So sometimes I'm, just kind of look at whatever, but I want to see insider shares. 250,000. 3 million. This might be worth looking at. It's FPH, 5 Point Holdings. Now I'm curious. And this is like really this is a big part of fundamental, like looking at fundamentals is, you might come across something that's interesting and then might want to check it out. So let's check this out. So insider ownership, 30%. Just want to see why they bought 3 million shares. Like they might have been uninformed buys, so I don't want to even take that into consideration. Indirect owner, they bought at 315. Oh, so it's this person, it's the director. Bought in October. Don't really, I don't like to pay attention to the sells because, a lot of people, these people need to, like, pay their bills and go on vacations and stuff, too. So I don't really put a lot into the sells. I think it looks worse when institutions are selling it in large amounts, if that makes sense. But the directors and stuff, I don't really put too much credence in that. Yeah, so I'm going to overlook the insider buying for this because there are also a lot of sales. It looks like. There's actually a lot of activity here. Yeah, okay, so let's just go back. Let's not get sidetracked. I'm going to remove this insider screener thing and we'll go back to return on equity. So, let me show you this. So, it is dividing the net income by shareholders' equity. This is the formula. I think it's easier to just put it up here instead of putting it on the screen. So, yeah, net income and stockholders' equity. Or shareholders' equity, and that's how you get the return on equity. So this matters because it indicates really good management of the money they do have, and that is something I want to see Because when you're looking at micro caps, I think the management is even more important than with a big like growth company. I mean, it matters with growth investing too, but for me, small companies that would be considered like value companies, I want to see that the management knows how to handle themselves, handle their money. So I'm going to set this to medium to very high, so between 10% and 35%, where I would really like to see over 20%. But I'm trying to keep it open in case some of these stocks meet some of the qualifications, but not all of them. I want to leave it open. Volume is something you can look at on both ends. You can look at low volume stocks, like stocks that haven't gained traction yet, and that could be a move. Or you could look at stocks that already have volume, because you could say, well, volume precedes price. Maybe if this stock has volume, it'll get going. And the price will reflect that. It just depends on what you want to see. I think I'm going to leave it blank for now because I'm not feeling interested either way. Price performance can be something big to look at. I want to see medium to high, but let's see, and very high obviously too, because I definitely just don't want to see, I definitely don't want to see a low or negative price movement. So let's go. I'm frustrated. I got distracted because I thought about investing in this company last week and I didn't because they were dealing with some like controversy and like fraud stuff, but it looks like they're already up, you know, I think it was 1 cent when I looked at it, so now 5 cents. Anyway, you can't win them all. So, what else should we look at? Forward EPS growth. I don't need that. I'm just seeing if I want to add anything else. Percent of institutional ownership. Oh, this is something that I want to show. So this is relative volume. It doesn't use those terms, but essentially this is showing you how, so 10-day average over 90-day average, it's like how is it trading right now versus how it usually trades, which I kind of like sometimes because it shows you stocks that are kind of picking up movement. But we're not going to use it today, but just keep this in mind. You can also do today over the average 10-day, which could be a better indicator of like short-term price movement. And then obviously if you care about analysts or different, companies that do research and give ratings, like Zacks Investment Research, you can do that too. But let's stick with what we have right now because we have 20 matches. I said in my last video that we would look in the sectors because that was what my whole last video was about. So let's see where a lot of these value companies are. Energy, materials, industrials, healthcare, financials, IT, and communication services. So these are actually interesting because these were like the top performing sectors of the last year. IT. So yeah, price performance over 4 weeks is up 10%. These are a little more than I want to pay right now. I'm not saying they're not a good value because, for instance, Next Technology Holdings, it's worth about its price represents about a fifth of what it's worth. Price to earnings, it's making a lot more money than The earnings it's making are not reflected in the price yet. Return on equity is huge, 50%, and it's up 15% over 4 weeks. I also think I want to add a 52-week one, and I'm going to make it really wide, but I want to get rid of any negatives. Oh, wait, why aren't they showing up? Okay, this is strange. So, apparently only one has a positive 52 week. Okay. Well, let's just remove this then. I don't know. We'll remove that. And let's go back into... Oh, it's because I was still in the sector. Again, this is why YouTubers have scripts, because if you don't, then you look silly like me. Okay, so now let's go back to the 52-week. 52-week price, and that's just the amount it's gone up over the past year. So I want to stay away from the negatives at first when I'm screening, and then I'll sort by security price. Ring energy. So I actually already have this on my stocks to watch sheet, and I do have a small position in this stock, but it is my most solid stock that I have in terms of fundamentals and being undervalued. As you can see, there's PB of 0.34, PE of 2.6, return on equity of about 14%. It's up about 12% over 4 weeks, and they're in oil, gas, consumables, exploration, all of that. So that's cool. I think I'm going to get rid of the price performance really quick and sort by security price and start kind of looking at fundamentals of some of the lowest price stocks. Because I think that might be a lot of what you're doing. Unless you want to invest in ones that are more like, $4 or $8. But I kind of want to see what I can get away with under a couple dollars. So let's look at Motorsport Games. I'm kind of interested. It's trading for 132. Oh, actually. Well, I'm kind of confused. How's their return on equity? Let me see. They have a huge return on equity. Let's check it out. So you can see what I've been looking at. Motorsport Games. I like stock analysis. It's just a really nice way to look at all the financials. Oh, so their revenue growth isn't too much. Yeah. So let's look around. Where's their EBITDA? Yeah, it's not very good. Free cash flow. Oh yeah, that was what I meant to put on there. I like to see cash flow. Let's go to the cash flow. Cash flow. Cash. Free cash flow, which is essentially what cash they have after everything is said and done, which is a good indicator of a company, their ability to invest more in the company itself, or, make investments or pay off, things they need to pay off. Basically, they're able to, without cash, they're not able to do the things that could really grow the business very well. And so what we're going to do is just not include negative. I'm fine with everything else. I'll look at it, but I don't want to see negative cash flow. So let's sort by security. I'm seeing a lot of energy stocks, which makes sense because energy had a really bad year. In fact, it was covered in my last video where we talked about market sectors and the biggest losers of 2024. Energy was on there. So it makes sense that a lot of these price to books are out of whack, like really low. And then a lot of these prices are low, the PEs are low, still the fundamentals are strong. So let's actually look at, what do I want to look at? I'm a little interested in this next technology. Barry is, I'm so frustrated. I also almost invested in Barry. The moral of this story is I need to actually pull the trigger on things, because when was I writing on this? Let's see. I wrote, this is me just torturing myself now. I wrote about Barry. I have this like big notebook where I'll write about all the investments I'm like considering and weighing. But I made a point. I remember making a point to write a whole page on Barry because it kept coming up on all my screeners I was doing. It was like Barry. And then REI, which I did get. REI. Oh, here we go. Barry Corporation. Oh, okay, so I'm not missing out very much. I wrote it down when it was 4.2, so 420, so it went up 70 cents. Okay, let's come back to Earth. Okay, so why don't we look at SHFH, because it's the lowest price, and I don't have any, so I have no vested interest in this. What are we looking for? We're looking for a company that is growing in earnings. We're looking for a company that, and this is all ideal, because sometimes these things don't come to bear on my decision if they have like a really, really promising product or whatever. But in general, we're looking for numbers to be going up from here in 2020 to here. Or at least from here to here. So, because this is the whole year. But we can look at quarterly. We're looking for numbers to go up. So far, it looks like their PE is going down, which we want. The PS is staying the same, but kind of on a downward trend from, I don't know, it's kind of confusing, from 2023. We'll just leave that blank. Which the price of sales is just, what's the price compared to how much sales they're making. The debt to equity ratio is good. So they don't have a lot of debt. Let's see. They've got, okay, current ratio is 0.85. So they do have some liabilities. Ooh, free cash flow yield. So this measures the free cash flow relative to its price as a percentage. And there's one, I can't remember who it was, like Value Investor, who says this is the best indicator of a stock that is doing well, or has potential to do well if they have a high free cash flow yield and growing, which this is growing, at least over the last quarter. And then it grew a lot between Q1 and Q2 of 2024. Shareholder return, oof. So it looks like they're diluting shares. They're not doing buybacks, which you obviously want to see. Doesn't count it out. Let's see about their operating cash flow. Okay. Let me look back at this income. Where's their EBITDA? So, oh, they're also their earnings. I don't think they have earnings before. So I guess this is just all they have. They don't have the EBITDA. Earnings before taxes. So their earnings are kind of going down, which I don't love, but their profit margin is good. So it seems like they're, if nothing else, it seems like their management's okay. Let's figure out what they do after I look at this forecast. Okay, yeah. Normally with these small ones, there's no analyst coverage, analyst target, whatever. But I do see it's kind of been going down, which I don't really like. But I'm kind of curious. And actually, I want to see company. What is it called? SHF. I'm wondering if, yeah, this is it. So let's go to their website. Cannabis banking. I'm so confused. What are they talking about? Okay. So, enhanced shareholder value, blah, blah, blah. Responsible and effective communication. Sometimes, depending on how I'm choosing to invest or like the time period that I'm thinking about investing, I will look at the news to see if they have upcoming stuff. That's mostly with biopharma, which I'll cover in a completely different video. That's where I got my start with value investing, was actually through biopharma and like biocatalysts and all of that. Let's see. Alliance. Yeah, this isn't screaming at me that I need to invest in it, so I'm gonna kind of move on. That's kind of what you're doing when you're looking for stocks, is like, you don't have to fully read everything for every company that comes up, but you want to, get a picture. So on the contrary, let's look at REI, because I do know enough about this. This isn't the company we're looking at, it's just what popped up, REI. I know enough about this to say that it's looking pretty good. So we're looking at REI. It's trading for $1.49. Its price to book is 0.34. PE is 2.6. Return on equity is 14. Okay. And it's in the energy sector, which we know took a beating last year. Like I said, it's in my last video. Go watch it. It's just like a long video essay type thing. Big gross profit. It's growing. They've got... And actually, I want to switch to quarterly to get an even more exact picture. So revenue went down a teeny bit this past year. Earnings per share is going up, which we like to see. Free cash flow, it's sort of fluctuating. It's up to you if you want to count that as up or down. Profit margin 40%, that's awesome. Which this really indicates good management above anything else. And if you want to know how like all these metrics actually work, I have a whole video about stock metrics and how to use them for value stocks. That's why I'm not going over them right now. The EBITDA margin. I was trying to pull up this. Okay. Let's go to ratios. I want to see what their free cash flow yield is. Free cash flow yield, 14. It does look like they're diluting, like issuing more shares, which I don't love. But they have a good return on equity. They've got good earnings. Good free cash flow. Let's check this out. Price to book. Yeah, these are all the numbers we were already looking at. Price to sales, which I really like. So it's showing how expensive is this stock compared to the money it's bringing in through sales. It can't be manipulated, which is why I like it. Objectively, this company is selling more than what it's priced at. So I really like that. I really like to see that. So, current ratio. And let's look at their balance sheet. They do have liabilities, but they won't have trouble paying those. Let's see what they have on the horizon. Gonna go to their page. You can always download these presentations if you want, but just keep in mind they're basically like advertisements. But they can still be helpful. Like, I like to look at them. We won't look at it today because this video is already like 30 minutes long. But let's go to their most recent press release. Annual update. I'm kind of skimming here. I just want to see. I'm looking for the. I was gonna look and see if they had anything about 2025 in here. Sustainability report. Okay, that's fine. Company info. Wait, what is this? What is this? Notice of pendency of settlement. This is interesting. What's happening? This looks old though. Presentations. You know what? Screw it. Let's actually look at their corporate presentation. Let's see what they have for 2025. Normally they'll give an overview of everything, so you can read this if you want. But you can also see, you know, who's their management, and you can see what they plan on doing for the next year. They normally give forward-looking statements. Let's see if they do that. Strong. Okay. We don't need that. What? So hold on. What is this? Historical price performance since January 2022. This is actually super interesting. Crude oil. Oh, so they put oil here. Great. And then ring here. Okay, great. So it really does track with oil. Which it does look like oil's gonna do okay. This year based on the last video. Horizontal play characteristics. I was really hoping that we could see something. Normally they'll put something like, oh, 2025, this thing will happen, and I like to see that because it gives an idea. On oily inventory. I love that. Wow. Focus on oily inventory. Yeah, debt pay down. All right, so we're gonna leave this here. But to me, like, this is one of the more solid, like, value plays, which is why I ended up going into it. And finally, I want to look at Next Technology Holdings because I don't know anything about it. So let's go to stock analysis again and check it out, and then also go and look up this company. Where's the company itself? Company. Do they not have a website? There's no way. Oh, okay. Wow. They need to work on their SEO because I had trouble finding them. So news. Governor Kemp. Oh, okay. Okie dokie, where we are. This is a very strange website. All right. So they say they combine innovation and expertise in order to individuate and invest in high-value assets and sectors as industry and energy all over the world. in high value assets and sectors as. This is very interesting. Okay, we promote technology and engineering know-how that can provide opportunities for business growth and expansion in the market. Also think they need a copywriter. So, they're a group. They, an acquisition. So something I don't like to see is something confusing. I'm not trying to like play dumb. I don't like to really deal with a company that's super confusing that has a confusing website. But let's just click on the most recent news just to see. Governor Kemp with Georgia. Economic ties between state of Georgia and... I'm confused. How does this have to do with... Oh, TMC Transformers. Okay. Right. In 2023. So they haven't made any announcements since 2024, which isn't horrible, but it's also not my favorite. But let's look at their financials, because I think that speaks volumes. 1 year. Ooh, what happened here? 582 to 275. Which could, mean you're going to go back to the mean. Looks like they did some reverse splits. Let's look at the 52 high-low. Yeah, wow. They've been all the way down. This is very volatile. They've been all the way down to 94 cents. And they've also been all the way up to 666. Not a good omen. Oh, wait. We Trade Group's wholly owned subsidiary. Where's this owned? Oh, in China. Okay, so... this is something... you'd have to decide if you think... Wait, hold on. We Trade Group Inc. Yeah, you'd have to decide if it's a good idea to invest in it. Based on, foreign relations stuff. Ooh, they have been diluting. So they've got earnings per share. Good earnings per share. They don't even have that listed. Let's see. Ooh. Oh no. Good return on equity, but wow. Yeah, they're really issuing a lot of shares. And they don't have a lot of these basic ratios listed that other companies do. But, okay, video is getting way too long. I hope this was at least fun to watch and that you learned something, and please leave any comments about if you liked this type of video or if you'd prefer me to stick to my scripted videos where they're a little more focused around one specific thing. But yeah, I hope this was helpful. If you have not yet watched it, please go back and watch my deep dive into the market sectors, worst performing sectors of 2024, because I think it will illuminate a lot with respect to this video. And then if you haven't watched the stock metrics video for penny stocks, also check that out. Until next time though, happy investing!